Hey everyone, welcome to Fiscal Voyage. My name is Felix, and today's video we're going to talk about a utility dividend growth stock that looks to be undervalued and coming into support in the technical chart. So we're going to look at the technical chart as well as the fundamentals and why I like this company as a dividend growth stock going forward for the long term. So make sure to subscribe to this video if you're new and like this video as well. So let's get started. All right, so we're going to talk about Spire. Ticker symbol SR. Right now it's going for $62.82. This is why I'm very excited about this stock, considering that the stock market is like all-time high, even though it's pulling back now, but it's also giving some opportunities with stocks that were lagging the market. So this one here was lagging the market, and I'm going to show you in the technical charts as well as the fundamentals why I like this company. So right now it's $62.82. So it had a nice decrease today at 1.44%. And some things I like this here, the nice 4% dividend yield, and this is from yesterday. So this is going to be slightly higher, maybe 4.20 or 4.15 or something like that with today's downturn. Dividend rate at $2.60, has a PE of 14, which is very moderate. There I like to see PEs, 12, 10s, but at 14, considering with the market highs, looks to be very attractive PE right now. But if we look at the chart for Spire, you can see here, this is the daily chart, the weekly chart, and the monthly chart. And we're gonna look at the weekly and the monthly because that's what, as long-term investors, is what we wanna see, not necessarily the daily, day-to-day charts. So you can see here around $60 the stock had support. Over here at 62, over here around maybe 50 or $60.55, over here as well at 60.37, and then now we're going extended. You can see here is like 3 weeks or 4 weeks it's been going down, and it's right now at like I said 62.87. So this looks like a great buying opportunity. It has a bunch of support. Obviously, during the COVID crisis, it dropped all the way down to $51. I don't expect that kind of decrease, but even if you buy today's market price around $60 to $62 and it drops $10, it's not too bad because then you can pick up more shares at a huge discount. And you can see here there was a bottom here and the COVID crisis, as well as around here in 2015 or so when it had around $50 price per share. But I like the $60 range here, but you can see here the support. As well as the monthly, you can see it more clearly here in the monthly, right over here, $59.50, right over here on 2018, you can see here $60, and then right here, late last year, and then now it's coming into it as well. So I like this stock fundamentally, technically, and you can see here this is support here at $55 way back in 2008, 2009 when it had that high here. So this $55, $60 area looks like good support for Spire. And then we're gonna look at the fundamentals for this stock here. If we go to fast graph, you can see here earnings been growing very nicely. It has a nice 45-degree angle, just going higher and higher and higher, something I like. However, price always is erratic. You have your ups and downs, you have big upswings, big downswings, big upswings, downswings, right? But the earning, the company itself, what is the company doing? Not what the stock price is doing is what we look at for long-term investing. What is the company doing? And we see here the company has been growing earnings very nicely. Last year it had a flat earning of just a 1% increase, but this year they're expecting a 18% increase in earnings, and then a flat increase for 2022, and then a 6% increase in 2023. S&P credit rating of A-, so it has an investment grade rating. Long-term debt to cap ratio of only 47%, which is good. Again, the yield very nice, over 4%. Earnings yields almost 7%, and this is from yesterday's. You can see here 9/13. So all this data is from yesterday. Tomorrow this will update. So this earnings yield is going to be over 7%, and this price obviously will reflect that as well, and this dividend yield will go higher. expected from this long term, earnings been growing about 5%. And if we shorten this to a 10-year period, let the chart load. You can see here earnings growth at 5%. This is a utility company, so they don't have huge earnings growth, for example, as a Microsoft or an Apple or Facebook. But this is one of those stocks that you should have in your portfolio with a nice dividend yield, a consistency growth as a utility company, and they're needed, a natural gas utility company. And if we look at the operating cash flow, it covers the dividend as well. So the dividend is well covered with operating cash flow. You can see here, very nicely covered. And if we go to performance here, we can see that the dividend's been growing. You can see here as well, the white line represents the dividend. And you see here the dividend growth. They don't grow it tremendously, but a nice 3%, 7% a few years ago, 5% in 2019 and 5% in 2020, which is actually pretty impressive considering the whole pandemic last year, with a lot of companies were cutting dividends or even freezing it. This company actually increased it during that time period, so that's very impressive. So again, back to the historic earnings, you can see the company just grows. These were high valuations, so the company was expensive with a PE of 22, and right now we have a PE of 14, and with high growth for this year, but flat next year. But I see this company continue to grow. If we look at a forecast for the next long term, you can see here they're expecting about 6% growth. So you could also expect a 4 to 5% growth in dividend with the current 4% dividend yield. It's safety of the dividend coverage. So I like this company a lot. I'm gonna have my order in. If we go back to the technical over here, you can see here, this is what it did today. Again, here's the support around $60. I'm looking hopefully tomorrow another down day, and that's where I'm gonna get in because it's extended down. So I'm expecting a bounce in the $60 area. And even if I don't get a bounce and I buy around 61 or so and it goes lower, I'm just gonna buy more because this is a solid company, long-term dividend growth company, high yield. And if it goes lower, I'm gonna buy more shares at a lower price with a higher yield. And I'm looking forward to that. So hopefully tomorrow is a down day. So there you have it. Those are my thoughts on Spire. Again, ticker symbol SR. I like the technicals. I like the fundamentals. Everything is matching very nicely here. So again, I'm looking forward to buying this around the $61 area. And if it gets lower, I'm gonna go buy more as well in that time period. But we'll see what happens. Hopefully tomorrow is another down day, another dollar or so down, so I could pick up shares at that price range. Again, I like this company, great dividend yield, starting yield, good long-term prospect, a utility company, so they tend to be safe. And the investment grade S&P capital credit rating of A, and the free cash flow and operating cash flow covers the dividend very nicely. So if you guys enjoyed this video, make sure to hit that subscribe button, and I'll see you guys in the next one.